Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what's really going on inside companies. And today we're diving into Antares Private Credit Fund's latest update. You might think it's just another report, but trust me, there are some juicy details about where their money is coming from and where it's going. Before we dive in, if you like getting these kinds of straightforward breakdowns of company filings, make sure you're subscribed. And hey, we've got a growing community over on Discord, linked down below, where we chat about all things finance. So what we have here is an 8K filing from Antares Private Credit Fund. This kind of report is for big, important news that the company needs to share with investors right away. Think of it as a special bulletin. The date for this report is August 27, 2025. Now, the company itself is Antares Private Credit Fund, and they're based in Delaware. They deal in private credit, which basically means they lend money to companies, but not through the usual public stock markets. Now let's get to the exciting stuff. Under a section about Regulation FD disclosure, which is all about making sure everyone gets important information at the same time. Antares announced something about their distributions. On August 28th, they declared two types of distributions for their shareholders. There's a regular distribution, which is like a steady income payment of about 19 cents per share. Then there's a special distribution, an extra bonus of almost 3 cents per share. These payments were set for shareholders who owned the stock on August 28th and were expected to be paid out around September 29th. These distributions can be taken as cash or reinvested to buy more shares. It's basically the company giving back some of its profits to the people who own it. Next up, we have other events, which covers anything else important happening. This is where we can get some real insight into the fund's performance. The first part here is a net asset value and portfolio update. Net asset value, or MEV, is a key number for investment funds. It tells you the total value of all the assets the fund owns, minus its liabilities, divided by the number of shares. It's like the fund's book value per share. As of July 31st, the net asset value per share for their Class I shares, which are the only type they offer, was 25.24 cents. This is a really important number because it tells you what each share is theoretically worth based on Antares' assets. Looking at the bigger picture, as of that same date, July 31st, the total net asset value for the whole company was about $679.5 million. $679.5 million. 609 or have already committed to lending, of a much larger amount around are already committed to lending, of a much larger amount around $1,650 million. To fund these commitments, they had about $645.23 million in debt outstanding. This gives them a debt to equity ratio using their net asset value as equity of about 0.95 times. This means for every dollar of equity, they have 95 cents of debt. That's not too bad. It suggests they are using leverage reasonably to amplify their returns, but also not excessively, which could be risky. The next part is the status of offering. This tells us about how they are selling their shares to investors. On September 1st, they got about $7 million in new investments from outside investors buying their Class I shares. This shows continued interest in the fund. They are in the middle of a continuous offering, meaning they are always selling shares and they aim to raise up to $2 billion in total. This is a pretty ambitious fundraising goal. Now, let's look at a table showing how many shares they've sold and how much money they've raised. This table specifically excludes shares bought by investors who automatically reinvest their distributions. So it's showing new cash coming in from new share purchases. They've issued Class I shares. The number of shares issued is 27,453,220. And the total amount of money they got for these shares is $683,530. $687 million in this offering so far in dollars and dollars. This means they've raised over $680, issuing new shares at a price that closely reflects the actual value of the fund's assets. This is exactly what you want to see from a well-managed fund. They're not diluting existing shareholders' value by issuing shares too cheaply, nor are they scaring off new investors with prices much higher than the underlying assets. They've successfully raised a significant amount of capital, which is crucial for a private credit fund that needs capital to make balance 4 cents per share. This is exactly what you want to see from a well-managed fund. They're not diluting existing shareholders' value by issuing shares too cheaply, nor are they scaring off new investors with prices much higher than the underlying assets. They've successfully raised a significant amount of capital, which is crucial for a private credit fund that needs capital to make loans. Finally, we have the signatures. This is where the company officially signs off on the report. The report is signed by Monica Kelsey, who is the Chief Financial Officer, True Scroll, and Monica Kelsey as the title. Chief Financial Officer Scroll fighting off on the financial truthfulness of this report. So let's break this down. Antares Private Credit Fund is actively managing its investments and returning capital to shareholders through distributions. They've got a healthy NAV, and while they are using debt, it seems to be within reasonable limits, giving them a debt to equity ratio of under 1. The fact that they are continuously offering shares and raising significant capital, selling them at a price very close to their net asset value, indicates strong investor confidence and effective capital management. They are growing, they are raising money, and they are paying their investors. What does this all mean? Antares Private Credit Fund appears to be on a solid track. Their ability to raise capital and maintain a strong NAV suggests effective management and a good investment strategy. The external context is that the private credit market has been growing, and funds like Antares are playing a bigger role in providing financing to companies that might not get it elsewhere. They are positioned in a dynamic market. The key takeaway here is that this filing shows a fund that is not only operating but also growing and attracting new investment. The distributions provide income to investors, and the continuous offering allows the fund to expand its lending capacity, which is its core business. The debt to equity ratio is a good metric to watch, but at 0.95 it's not screaming danger signals, especially if their underwriting standards are strong. Now, if you're an investor, this is generally positive news. It shows competence and growth. If you're considering investing, their continuous offering makes it accessible, but as always, do your own research. Understand the risks associated with private credit, like credit risk and liquidity risk. Alright, that's our breakdown of Antares Private Credit Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.